Welcome to our income tax class. Now we are going to discuss about income from other sources. So basically you are all well aware that in income tax the last head is income from other sources. If I am working in a company or any employment, if I am in a employment getting salary, it is salary income. If I am having the house and it is let out, then it is named as income from house property. If I am doing the business income. If I am engaged in professional activities, then professional gains. Then another one is if the capital asset is transferred, then it is under the head called capital gains. If the amount of income received and not covered under, not grouped under the above four heads, then it is named as income from other sources. In this case, we are given with some set of informations, that is lottery winnings we are getting and horse race winnings we are getting. See, you know very well, any amount of winnings from the lottery is taxable. Amount of winning from horse race, that is also taxable. And any amount received from the friends, relatives is taxable. It is also considered as the income. Any amount of card games, bettings from card games, and the amount of income received by way of doing some activities, then it is also taxable. But what items are taxable, up to what extent those things are, what I have listed above, how it is taxable, that we will have the discussion based on this problem. The first one point we are having winning from lottery. If I got any winnings from lottery, it is taxable 1 lakh rupees. In this, we should see one important thing, the amount of winning. That means you are given with that 1 lakh rupees is gross income. Whereas winnings received against the lottery, then that means net income. So any amount of net income if we received, then it should be grossed up. Okay, whereas if you are given with the gross value, then no need to once again grossing up. Okay, what is the meaning? Because net income, in the sense already tax it was deducted, now no need to once again add the tax with that. Once again we have to calculate the tax for that, so we have to grossing up, then tax should be calculated on the gross value. Whereas here, the winning from lottery 1 lakh rupees, it is considered as a gross value. So straight away we are taking. Then second example, by seeing this, you will get clarity on this point. Amount received, just now only I told you. Amount of income received. Here, the amount received against the horse race. The amount what you have received is 35,000. Since the term amount received is given, so it is considered as it is a net income. We can confine that amount given 35,000 is the net income, so we have to grossing up. How to grossing up? The TDS for the casual income is 30%. What does it mean? That means when I am receiving the amount of income, after deducting the tax only I can get the value of the income. So the 35,000 is after deducting the TDS of 30%. Okay, so now I have to grossing up. How? 35,000 into 100 divided by 100 minus 30%. Balance is 70%. So 35,000 into 100 divided by 70. The value of a gross income that comes to 50,000. So for all the things, if we are given like that, we have to grossing up. How to grossing up? Into 100 divided by 100 minus percentage of TDS. Then another one is the some gifts he has received. The assessee has received. Number one, the amount of gift received from his friends, 20,000 rupees. It is taxable. Okay. from his friends he received a amount, it is a 20,000, so it is taxable. Straight away we have to take that 20,000. And another one is gift received from the elder brother. Please note it down. Any amount of gift received against the gift received from the relatives is not taxable. Mind, previous one is received from friend, whereas this is from elder brother, so it is fully exempted. The third one is received from received as marriage gift. Any gift received as marriage gift, then it is also exempted. So when you are receiving the gift from the relatives, when you are receiving the gift from against marriage, both the things are exempted. Then fourth one, again gift, again amount received from the friend. So any amount received from the friend is taxable. That amount of 18,000 is taxable. Then whether the local friend or NRI, whatever it may be, if the amount is received from your friend, that amount is also taxable. That amount is 80,000 rupees. So you total it. Total amount of casual income is 1 lakh plus 50,000, and balance 20 plus 18 plus 80, that is 1 lakh 18,000 is gifts received under different circumstances. So the total amount of other source income, which is 2 lakh 60,000, it is taxable income. So after ascertaining that a taxable other source income, what we have to do, this amount should be taken as taxable other source income in income statement. That is your total income statement. You know very well. Total income is salary income, house property income, then business or profession, then capital gain. First, long term capital gain, that should be eliminated from this total income because it is taxable under 30% slab, and other sources income is taxable separately. Income from sale of securities, sale of shares, etc. Then this other sources income should also be taken with that. So in that way, here calculated taxable income that comes to 2,68,000. In that way we have to take. And mind it carefully, all these things I have already discussed, I have already explained in the class. For want of additional experience, I have solved another one new problem, and this is the opt one for section B type problem.